So we have the market open just a few minutes ago. It's been a while since I was able to just get this stuff out of here. It's been a while since I've been able to stream or vlog on the actual open of the market. That's usually not how my schedule goes. But today's like kind of a light day, and I'm only um, busy with personal stuff later in the afternoon. So it's like, happy Friday to me. So just figured I'd come in here because I missed a couple of days worth of vlogging, and just to summarize what happened with that is I got the the 250 to, well, let me first make this very clear. Where was it? I think it was over here. So I picked up a win off of the this 250 down here. I think I had mentioned on the previous stream, that was maybe on Wednesday. I don't remember exactly. I said that on a larger time frame. It's probably looking at the hourly. I saw divergence here. Nope, that was too far back. I saw divergence up here, uh, from, you know you have the lower low, but you have a on the price, but you have a higher low on the RSI. So I saw that. So that's usually not enough to just enter the market right there and then, and take it up, go for a new highs and stuff. That's usually not what that means. What I took out of that was, and if I were to, if I got kind of lucky, because if I was too conservative and I tried to play it too safe, it wouldn't have worked. So the this is one of those cases where the quarter's edge strategy was better. That was the only thing that worked, literally. Anyway, because if you look here, um, after it made that divergence, you have a not that great. You have a somewhat decent, maybe not even qualifying hammer kangaroo tail right here, followed by a bullish engulfing candle. A lot of the conservative strategies out there will have you wait for this formation and then enter at the close of this candle, which is that's a good strategy, but it would have ended up in a loss. Been like, okay, take the market order after at the close of this candle, put your stop below here, and go for like what is like a 1-to-1, 2-to-1. That's a really common strategy out there. That would not have worked in this case. That's a good strategy overall. In this case, it wouldn't have worked. Instead, what did work was the quarter stuff, and this is, the 250 to the T, almost. Well, let's exactly look. The low of this was 227, right? So that's pretty close. So we took this 250 and took it up to the 500, which was, and it was textbook. Now, from the 500, um, I was interested in taking it back down because technically this is still a downtrend. However, I got busy and I missed it. So the way to have done that would have been, there's two ways you could have done it. You could have done it off of this bullish or bearish engulfing red candle, and and then been like, all right, I want a piece of this, and taken a buy stop order down here, which I don't know that would have. Oh no, the buy stop order would have worked. That's one way to do it. Another way to do it is to, or you could do. This is not a or. This is a both and. You could have also just been like, okay, you know what? I believe in the bearish momentum now. RSI is below 60. Give me the 575 as well. Both would have worked. If you had both, then you would have had double the win. But I usually don't do that. I usually just have just the limit. Because the problem with chasing it up is because you could get picked up on the way up, and then it could easily come back down and stop you out. And um, I don't know. In this case, it would have been a magnificent win. We had a strong move down because of news, inflation numbers, I believe. Um, yeah, I don't remember exactly what it was, but I just know that this massive move down was because of news, but I didn't really pay attention to it until after the fact. And that's where I got kind of lucky, where my limit order, a buy limit, was set at the 175, which is a backup leftover from the 250 that was a winner. And that almost got stopped out really close. It was by 4 points, so I got saved. So there have been times where I've streamed about I get shafted on a stop loss that's like less than 5 points because that's nothing on the Dow. 5 points is nothing. But this is one where I got saved from a stop out by uh, less than 5 points. So that's how it goes. Sometimes the market gives in this case, and sometimes it takes. And we tend to only remember the times that the market takes from us, and we got shafted, it was unfair. Those are the times that we tend to remember. But today is a day where, or yesterday technically, is a day where you got to remember the market is I will go as far as to say the market is fair. We just perceive it to be something that we deserve more than what's fair. And that's a mindset thing. And so this is one where I'm grateful. I got lucky. I admit it. This is like, I don't really have rules around taking this away. Especially because like I mean, by technical analysis, I shouldn't have had that limit order there. I should have taken it away, but I usually don't take it away. I usually let it play out, and sometimes that leads to losses, and in this case, it led to a win. So I don't really have big rules around. If I put a limit order down, I'm committed to it. That's how I look at it. But if I didn't have this win, there's really very little evidence to take this 175 area. Like there is a little bit here, but it's not good at all, really. I mean, maybe I'd have to really squint, and it would be kind of like forcing a trade if I really wanted a piece of this 175. You want to use this area or this area right here. This is a rally base. Is it rally base base? This is a weak move. It's part of a strong move up, but you could make the argument, I suppose. For me, it was just I got lucky on the counter trend. This is what, and to me, I just believe in the quarter strategy. Like this is what it can do. Like it will turn around these areas within a 75 point stop loss, and it'll move more often than not, it'll move a full quarter off of that. So that brings us to what the market is doing right now. What am I interested right now? I was maybe considering taking this to as a sell area, this drop base with a pretty crazy wick, drop base drop. However, I also just got done saying this is caused by news, which takes away from the strength of it. It looks like a crazy move. It's a very strong move, but the durability of it being once it's already been done, and when you test it again, the durability doesn't usually quite stand up as well as it was if it's not generated by news. So I'm a little bit iffy on it. I'm interested in this 500 area though. It just went up to the 500 area and it started to started to come back down a little bit. Um, that's and the RSI couldn't peak above 60. So I am like more convinced of the downtrend. I'm looking for like before when it was like this. Yeah, exactly. When it was exactly like this, or not even, and I saw the low get created with divergence, I'm like, okay, I might I am getting ready to be bullish on this for a trend change to be bullish again. Because from here, like if I see this, I'm like, okay, obvious downtrend, lower lows, lower highs. When I see this high get broken, I'm like, all right, I'm not ready to change my mind yet, even though the RSI is above 60. I need to see it create a new low and then another new high before I actually change my mind and say, okay, on this time frame anyway, I'm gonna call a trend change. Trend change. Instead, what I saw was choppiness, and it's like, okay, now it so like I kind of have to reset the counter from this area because now instead of saying, oh, I was getting ready for a trend change, but really what it gave me was a sideways range bound price action. So and it still worked, and it was inside of the a two. This is I was streaming about this last week, and this still works. The quarter still works. There's like 3 or 4 wins in here if you just take the 500 and the 750 up and down, up and down, up and down. If you could somehow determine early on that it was a that it was going to stay range bound like this. I don't know how you could know that, but even if you only took the 750s down because you were still believing in this downtrend, it would have worked multiple times. If you were to have believed only in the uptrend, um, because you saw that the momentum was above 60 and then the new high and stuff, you were like, come on, bullish uptrend, bullish uptrend. It would have still worked. You would have worked at least twice, once and then twice. So you would have you would have back-to-back wins, 2 wins in a row. No, you wouldn't have even come close to a loss. But then I forget what this was. This was the morning of the news announcement. I think we had 2 news announcements that day. This is the big one. Oh no, that last week or this week. Sorry, jeez, I'm all over the place. I'm already so done for the week, mentally checked out. We had on Tuesday we had something, and then the inflation numbers came out on Wednesday, which was yesterday, which is this move. Both caused these massive moves down. One in the morning and one in the afternoon. So you can't really do anything about that, right? That's just how news announcements are going to affect the market. So now, with 2 news announcements back to back, kind of throwing in a wrench of like massive red candles. Now I don't really know what to believe. Is the bottom line. I don't really know if this will hold up because, like I said, this is kind of the durability is weaker. Um, Once the news is already out. Oftentimes, like I've said before, when you have news, you can fade it all the way back up to the origin of the move. But in this case, we didn't fully get. We only got like halfway up there. This one was maybe 2/3 of the way up there. If you're a Fibonacci trader, you love this stuff. You love the fact that it hit only like almost exactly to the T, whatever. I don't even know how to put the Fibonacci thing on here right now on this platform, but just eyeballing it, your whatever the 60 something level is was probably held up really well here, and I don't know, but maybe not here. So just looking at it like this, it looks like there's a downtrend that wants to happen. Um, you know, I'm looking at the RSI unable to peak above 60, and I'm thinking, okay, like I'm looking for prices to move below here. So that means that I will not take a long in this 33 175 area that I got lucky on. I will not take a long again here unless I see divergence and bullet, like unless I see a lot of the evidence. I won't just place a limit order here like I did last time. But that is the area. So what I'll do here is I'll probably just put an alert at the 190. So when it's near that 175 area, I'll see how this area of support holds up. I'm anticipating it to not hold up and break through. I might consider taking a long counter trend at the 33,000 even because it's such a strong psychological level. Maybe I'll try to, and I think, and depends on if I have enough room to scrape a whole quarter out of it because I only look for quarters. Keep it simple that way. Well, this candle is just breaking down. We after since the first 30 minutes. Let's look at the 15-minute. We just printed the first candle. It was kind of uncertain with this, and then the second candle will probably make a new low. And usually when this happens, you have a 10 a.m. reversal. And when that reversal comes, I want to be ready for it. I'm anticipating this to. I don't really know. I don't really see a good area. I feel like I'd be forcing it kind of at this point. But with this printing soon, you can make the argument for this being a rally base drop, which is a lot of freaking bases in, but it's not terrible. Under 6, under 7 is still viable. It's just not perfect. And I mean, I guess you could argue that that's this area actually holding up. This candle, this base drop, is actually holding up, and we don't know yet. We haven't seen the rest of the day yet, but you could argue that this is holding up for hopefully to make new lows. Now, this is a little bit aggressive, but I can take I don't usually like to take the front running trades, but just to have one sitting there. Sometimes you got to be aggressive. Uh, 500 and what's 250? Okay, it's 175. Okay, so it's literally the reverse of the order that I just from the trade that I won. The trade that I won, I entered at 175 and took it to 425. This I'm entering at 425 and taking it down. So if it comes back up here, okay, we'll see. I'm not. I don't anticipate this being a fake out and then going like moving all the way up. I don't anticipate that. We don't have. There's no fundamental support for that. There's no technical support for that. It could still happen because all of this could be a fake out. That's not uncommon at all. But this is an aggressive move that I'm still willing to take. If I no, because and the reason I hesitate is normally I like it. I like the even number. I like the 500. However, we have this little, you know, somewhat reversal. On a smaller time frame, this would be a reversal. This would be like a downtrend on like a 1 minute time frame. It couldn't quite get to 500 before it started moving back. So and for it to actually get to 500 now means it's technically, you know, it's made a low, a higher low, and then it's made a higher high. So if you have the 1, 2, 3 movement, moving upwards, that makes me change my mind a little bit about how bearish this trend really is. Like I said, I'm already kind of iffy because I'm not sure how much I believe these red candles that made new lows on the 1 hour chart based off of news and news only. So this is just the way that this is just the nature of the market right now. It's like big time contradictory effect with there's still a lot of people that want this. They want to get back to the good old days of 2021 where the market was just skyrocketing. There's still that kind of sentiment and residue of that positive sentiment left over. There's still money on the sidelines that's ready to push the market back up. But all the fundamental signs point to we got some serious problems globally, economically. So that those the buyers and sellers, the bears and bulls are at war with each other, and it's a pretty even match. That's why it's so confusing to trade, and that's why investors are confused and maybe not even looking at the stock market right now because you can't really even establish a trend. Our best chance as day traders though is to just stick with what is given to us and be nimble and flexible on the shorter time frames, which is what I'm doing. But the my own personal style, I can't go too small because it requires me to be too active. So this is my kind of sweet spot of swing trading. And let's see what this candle prints here. It doesn't even look like it was going to be that strong of a candle. This hourly candle didn't even break. It just, yeah, it doesn't look like it's going to close below. Let's look at it on a smaller time frame, or even a 15-minute. Yeah, see that there's buying pressure on the 15-minute candles, which is what I was saying. I was like, okay, you could easily say this is like a new low. Wipe out all the people who wanted to buy in from this move up. Retail day traders and scalpers, just wipe them all out. Hunt their stop losses, and then what? And then is it gonna continue to go up? I don't know. This is the candle I think where the imbalance is the most obvious that caused this kind of reversal in the first place. I'm not actually sure. The more I look at it, the more unsure I get. I mean, this is the perils of looking at a chart too long and looking at a time frame that's too short. It's too small. But the only thing that matters is the order entries and exits, and I only have one out there right now. So worst case scenario for me, I'm going to take one loss today, and I'm okay with that. Um, I I'll be back on Monday, and we'll see how all this stuff pans out.